Good morning, Chris.
Yo, whoa, what's up, man?
Hey, this is Brian Jones. I'm here with Chris Hood, professional trader and world's most interesting man.
Still having the world's most interesting hairstyle. My wife says that I look more like the crop of hay that comes from a farm now. She's like, this has got to go.
You look great. You look just like a person who's been locked in Corona in the world forever.
I just can't wait to take this whole lot off. But she's been threatening me. She's been telling me to go and line up next to my 8-year-old so that we can get our hair cut together. And I'm like, no. Because what she's going to do, she's going to go straight down the middle and leave me looking like some weirdo. I'm like, no. I'm going to wait for the hairdressers. But I don't know, man. Government's doing a head fake on us here. I thought they were going to let the salons open, but they didn't. So
is it everything, all the small businesses are still kind of closed, or
we can go into restaurants, but now only a little bit. I don't know the exact numbers, but it's like a tease. Here's a little bit, and then they're going to whack us again. But our numbers have come down. We still haven't got the vaccine. I still can't understand how the vaccine just hasn't been. We're not the world's biggest country here. Or in terms of people, I would have thought that we'd have more, but apparently they haven't had them delivered yet or something. So I try and avoid all of that stuff because it's quite negative. It has quite an effect. I noticed with my son, this constant, 1,000 people dead kind of news every day on the TV. It's like this, so many dead, so many dead, so many dead. And it started to affect him.
So the schools open? Are the schools open?
He went back yesterday. So he's loving the fact that he's back with his mates. Yeah. But still, the news is just dominating, how many people are sick and dead for a whole year. That's all we've been hearing. I think we need some good news, man. I think the best news that's come out is Elon buying Bitcoin yesterday. That
really shot a whole lot of Bitcoin related stocks up for sure.
Yeah, our couple shares that we have, Mara, Can, Riot, all of them up. I see Mara is up another 13%. Can is up 8.2. So we've been able to get in just before all of that. So yeah, I'm pretty excited for Bitcoin and weed. Those are the two things that seem to be like really moving at the moment. Home builders also. We did a trade on Friday on the home builders index, and that's up just over 35% already.
Yeah, I'm in the ITB trade, and
ITB trade.
Can I have a couple positions on Can?
Yeah, Can looks good. I'm pretty keen on all of this. Palantir had a great day yesterday morning on the app. It's opening up another 2%. I'm just looking at my screen here. What else have we got that's looking good? Well, Mara is going to be up 12-13%. Can will be up 8%. ACB, we did a trade yesterday on ACB with my day trading group. That's going to be up 4% this morning. TIGR, this little Chinese stock brokerage in Hong Kong has been an absolute revelation for me. This thing's up over 100% for us already. Hexo's doing well. Yeah, I think weed and Bitcoin. If you're going to be betting on anything at the moment, bet on the power of Elon, man.
And weed.
Yeah, and weed. You're going to have to smoke a lot to buy into some of his other stories. But I think I think don't bet against Bitcoin at the moment. I think that it's going very much more mainstream, and that will change the dynamics of the market. The only thing I'm worried about is the government can change its rules around how they treat people that trade it, and if they start taking away the uniqueness of Bitcoin, so the fact that it's always been seen as a sort of libertarian thing away from the money printing, right? But once the government gets in on the whole act of issuing Bitcoin denominated bonds and stuff like that, that could be interesting. That could change a little bit. I'm a lot more bullish on something like Ethereum as opposed to Bitcoin. I think Ethereum is definitely the future of how cryptocurrency is going to work. Don't ask me to explain it. I am not an expert on crypto at all, but looking at the charts, you definitely see a little bit more upside on Ethereum than you do on Bitcoin. Ethereum futures come out soon.
What is I know that there's some ETFs that track Bitcoin. What's the ETF? What's the Ethereum?
The only one, Ethereum is ETHE. Grayscale have got some pretty interesting products. The problem is with a lot of them, because they're the only one, there's a small premium to the price, right? So it's not, although it's an ownership, direct ownership kind of ETF, so you can actually track the share that you own. There's a little bit of a premium, and I think JP Morgan will be issuing an ETF on Bitcoin soon. As soon as there's more variety that comes into the market, that premium will disappear. So we got out of our GBTC position a couple of weeks ago. We made some money on that. We got out of that. We moved into Bitcoin Cash, so BCHG, which is a little bit more, it's a smaller thing. And I like the fact that it's priced a little bit more affordably for most people, and ETHE. So we use those two as our proxies for profits. So when we trade and we put, instead of holding it as cash, we'll put it in there. So I like them. I think that they're good products. In the absence of going and getting a crypto wallet, I'm too old for that stuff. I struggle with my frequent shopper's card for the drugstore. So,
Right.
don't ask me to have a crypto wallet. I like the idea that it's all linked to my brokerage account. So it just becomes a little bit more convenient. Probably not the same. But, once the futures for Ethereum come out, I think that we're going to see a lot more interest in it. I really do. I'm a big believer in this. Mara, Riot, Can, Overstock, all of these companies are Bitcoin related, or crypto related, should we say. Some of them are a bit more Ethereum than Bitcoin, but I think that there's going to be some big movements on these stocks. So just buy and hold.
What do you think that the sort of the catalyst was? Excuse me, I'm got a little bit of a cold. Not coronavirus, just cold. Yeah.
There we go.
So, what do you think that the impetus was for the cannabis stocks to go up?
Man, I just think people are getting fed up and need some relief, man. I don't really know. I look at it and I go, I like the idea of medical cannabis. And I think that there's this idea that a lot of the states are becoming a bit more relaxed in the US about, the criminality of marijuana possession. So I think that there's definitely I saw West Virginia decriminalized marijuana a couple of days ago. And I thought at the federal level that there was something in Biden's first week. I saw something about marijuana. So I think that there's a general acceptance that this is going to be a lot more mainstream in the coming years. That's number one. Number two, there's only a couple worth buying. Like this is the thing with marijuana. It's the same in biotech. There's a lot of companies, but unfortunately, a lot of them are rubbish, right? So if anyone puts weed in their name, it could work. I personally like Aurora. I like Canopy. I like the code GRWG. I like the ones that are like solid businesses, and if you actually go into the underlying businesses and you can see that they are, stable, growing, reasonably well structured in terms of their funding, those are good investments to make, because I think as cannabis becomes more mainstream and decriminalized, it's those bigger companies that are going to be doing really well, because they're going to just buy up these smaller ones. Right. There's a lot of small companies, there's a lot of Canadian marijuana stocks. I don't follow them too much. I prefer the ones that are more liquid and more institutionally bought. It just gives us more flexibility to go in and out of positions. But yeah, I think the big thing is going to be the decriminalization at the state level in the US. The more that happens, the more demand there's going to be. I personally like the product. It's not good for trading though. You shouldn't do it when you trade.
Right. Wait till after you're trading.
No. You just, I tried once. Maybe I shouldn't be putting this on a video.
It's illegal where you are, right?
Yeah. I tried it once. I have chronic back pain and arthritis, so I take it for the pain. Man, when you trade on a high, it's pretty cool. And then you sort of can't really remember what you did. And then you do it again and then you lose. And then you're like, shit, I don't know what to do now. So I just decided to give it a skip.
Well, anything that affects your decision-making capabilities. I remember years ago, I would occasionally on the weekends, whenever Amazon first came out with the one-click ordering, I would come back home from, drinking with my friends, and I I'm just not really ready to go to sleep. So I would get on Amazon and I would just order all this stuff. And I was like, it would show up at the door. I'm like, what is this? And I mean, I was at like so blackout drunk that I couldn't, and I was like, oh man, because that's dangerous. Like just click the button and you've ordered it.
Well, the problem I've got is I'm not drunk when I do that. I'm usually just bored sitting in front of my television. I haven't got anything else. I actually checked the other day. I've bought 651 books from Amazon. And the problem that I've got is that the genre is all the same. So it's either Brazilian Jiu-Jitsu. I think I have like 300 books on Brazilian Jiu-Jitsu and about 300 books on option trading.
Yeah.
And the problem is that there's no new material. It's just the same material, just reorganized in a different way. So, I've read 300 books. And when someone says to me, did you read 300 books or did you just read one book 300 times? I'm like, well, I think I might have just read one book 300 times. It was just formatted a little different, different font size, different pictures, but it's all the same. All the same.
Yeah, there's always some different information in there. I've kind of taken a minimalist approach. I moved into this apartment and I'm trying to keep it decluttered. So I have a tendency to collect books, and I had thousands. So I got rid of them. And then I have this one in, one out policy. So whenever I get ready to make a purchase now, I say, have I read the book that I'm working on right now? And if my answer is no, then I just don't do it. And it's helped me from getting these stacks of unread books that I have.
But now Kindles are terrible because you could just accumulate all this digital content without ditching stuff. So I've got keto recipe books. I've got maybe 100 keto recipe books that I picked up for free about 7 years ago. Because people used to bundle these things. They used when keto first came out, they'd bundle it, or paleo when it all became the big thing. It was like, here, have these 20 recipe books on smoothies. Like you wonder to yourself, how many times can you take kale and put it with something else just to, I've got the proof. I've got the evidence. I still like the hard copy book though.
I do. I'm definitely a hard copy kind of guy. I like to highlight and, I like to feel the book.
I like that too. It's terrible when you go on holiday and you want to take the top 5 books with you, and they all happen to be Saulo Ribeiro's Jiu-Jitsu Encyclopedia, that university book. It only weighs 8 kilos. It takes up all your luggage allowance. When
you have to get a second checked bag just for your books.
Oh, I have to buy an extra seat just for the book bag. So the Kindle does help with that. I like it, but the problem with Kindles is that the formatting goes all out. So you've got to turn your head a little bit, and sometimes the graphs or the pictures aren't aligned. So it's a bit confusing, but as I get older, I get confused easier. That's what I've worked out. My level of confusion tends to increase as I get older. Anyway.
It looks like the market might be pulling back a little bit. Do they?
I think that the market is a little bit overextended now. I'm going to share my screen. And I'm going to pull up the graph and we can talk it through. One of the problems that you have in the market is whenever you see the index really pushing itself up here, this is quite overextended, right? So this is our 8-day exponential moving average. This is our 21. You can see how far up this is. This is very extended. Here is our Ichimoku cloud. We've got quite a lot of space sitting between where we are and where we should probably be. So I'm not too worried that we're going to have some pullback. I expect it probably back down to around the 8. I think we could come back down to 389. But I'll tell you now, 400 is in the plan. You don't bet against the market. This is the thing. People will often take a graph like this and they go, nope, it can't go any higher. And then they start shorting the thing and they land up losing money because they were opinionated. What you've got to do is actually just ignore your opinion. I think the market is up there. I think the market will come down, but I don't think the market's going to come all the way back down to here. I don't think the market's going to do this. I think the market's going to come back and then it's going to chop up, then chop down, then chop up, chop down. The problem with a lot of beginner traders is they see the world in black and white. They don't see this gray area that can often hit people hard. And when you trade, you've got to be careful not to trade black and white. That's what I see. The market is going up. You trade the market going up. you don't try and become opinionated and say, well, the market's got to come down. You know, I think you were with me when we were doing, Tesla. And, we were shorting Tesla back here. Where was it? Let's get the daily chart coming up here. We were shorting Tesla down here at the 200s, right? Somewhere around here. And this is going back to last year. We were shorting it here. It was overpriced at that point. It had a PE of like 800, crazy stuff, right? But once the market started to confirm that this wasn't a viable short, it didn't matter what we thought. It doesn't matter what you think. The market will always be right. So the market is what the market is. Don't play against the trend. If the trend is up, the trend is up. It's not about, well, the market can only come down. No, it can't. The market can continue to go up in perpetuity. And this is something that beginners really struggle to learn because they become so binary when it comes to their trading. They go, well, the market's got to come down, so let's buy put options. And then they start buying put options, and then those put options just lose money until eventually they capitulate and go, well, I'm not going to hold these put options anymore. Then they close them off, make 100% loss, or they close them for a loss. Then the market goes down. So what they had was they were directionally correct, but their timing was wrong. So timing, you can be right. It's just you're not right now. So it's a really important concept for people to remember that it doesn't matter what you think. Don't trade your thoughts. Trade what you see. Trade the chart, not your opinion. Because your belief system is one thing, but your opinions are different. I don't think Tesla's a company that should really be as valued as it is. That's just my opinion. Doesn't stop me from trading the chart. So it's something that's really important for beginners. Don't trade what you think is an opinion, because you can be completely correct. You could be 100% right, but the market will always be irrational. So the market will not confirm. The market doesn't care what you think. The market doesn't care what I think. If I think Tesla's worth, you should be trading on a PE of 10, well, who cares what I think? It is what it is. So always remember, trade the chart, not your opinion. So the market,
reality definitely trumps theory. You have to look at what's
sure.
Not what you
absolutely. Yeah, the market doesn't care. If I look at the SPY, do I think the SPY is going to come down? Probably not. I think that there's too much sitting outside the market. These hedge funds, after the GME debacle, are all on the sideline. They have to catch up. So we've got the hedge funds on the outside. We've got the Corona stimulus package that's going to come at some point. Which are the stocks that are going to work well once those checks are in the hands of every normal American? Oh, Walmart. If you want to be doing something smart, you'd be getting Walmart call options for 6 months, and waiting for everyone to get their checks. Those are the kinds of things. Nike, anything of this discretionary spending, those are the things that are going to do well.
Are you saying that people aren't fiscally responsible with their stimulus checks?
I think stimulus checks and fiscally responsible don't go together in the same sentence. Unfortunately, the consumer mindset is still too entrenched. So, the American consumer by default doesn't have a lot of savings. The average American doesn't have a big 401k. They don't have a lot of money. They pretty much live paycheck to paycheck. And Corona really emphasized that with, a lot of these sort of lower paying jobs getting wiped out. It makes it even more stark, right? It's more extreme. Maybe if you were living check to check, you won't be going and buying a new pair of Nikes when you get your stimulus check, but you might be buying groceries at Walmart, things like that.
Yeah, definitely. So what do you think about this stimulus? What about this federal minimum wage idea? Do you think that's going to have any impact?
Look, I'm a socialist at heart. And a capitalist. I'm like the complete mold. I'm a socialist for social things, but I'm a capitalist in the sense of leave me alone and let me make my money. I'm a big
But
believer
don't they have
that,
to take your money to give it to other people for socialism to work?
you know what, in Canada, I pay a lot of taxes, but I'm fairly comfortable paying taxes when I know it's being used for good things. We've got healthcare, we've got a good social security system here. If I think about it, there's a bit of an irony here. You can't say to people, your frontline workers are essential people, and then pay them below minimum wage. There's a little bit of a contradiction there, right? I believe if someone's doing a job, they should be paid fairly for what they're doing. And if you look at the cost of living, just rent, I think there was something I read the other day. For someone to take, or someone to be able to afford the median rent in the US, they would need to be earning $40 an hour on a 40-hour work week just to be able to pay that 30% of their income for the average rent, right? So there's all of those elements. I think there is a degree of vulgarity on wealth. I really believe that. When you see these trillionaires or billionaires making billions every minute, whilst the guys that are struggling to put food on the table are working, 100 hours a week just to be able to survive. I think as a quasi-socialist, I do have a problem with that. No one needs $200 billion. I don't think you need that to survive comfortably. I think, Jeff, Elon, Larry, all of these guys could survive on a little less, right? And I think that there could be a little bit more of an equitable distribution. That's not to say that we should be handing things out for free. I don't believe in that. I think that we have to take risks. I think entrepreneurs should be rewarded for the risks that they have. And I'm all for it. I think if the government mandated a minimum wage act in the US that brought it up to that $15, I think that there would be a lot less social issues. You'd have a lot less people struggling to get by, and we have to recognize that.
Do you think that has any impact on the market in terms of, there's some news coming out. Obviously, you got this impeachment trial. You've got the stimulus package. Is this stuff already priced in, or is this sort of driving?
I think the market's fairly intuitive in terms of pricing. I think that they take a lot of the stuff and put it in already. Has the market priced in the fact that Trump will, may or may not get in? I don't think the market cares. It's like the GME thing last week. Like, it was all panic and, excitement and news stories and everything. Who's mentioned it in the last 3 days? It blows over pretty quickly. So I think a lot of this expectation is already priced in. The market's smart. They forward look at these things. You can't really sidearm the market with anything now. I think that information is far more accessible for a lot of people. What you can look at is the bigger trend. I think that the bigger trends are, look, technology is going to continue to drive most of the stock market returns over the next couple of years is going to be driven by technology. It's not going to be driven by your old economy kind of stocks. We've seen that over the last couple of months, or let's say the last year, where you look at NASDAQ, how NASDAQ outperforms the S&P, right? Then you have to look at things that are going to change the world. The coronavirus did us all a bit of a favor. It sped up the transformation of the world and the way that we do things. It made telecommuting and working from home far more acceptable than it was 10 years ago. 10 years ago, I remember being at one of the banks, working from home was always this working from home kind of thing. You sort of sat on your couch and watched Netflix with your phone next to you. Now it's a little bit more organized and controlled. I think things like self-driving cars and delivery of Amazon doing drone deliveries and stuff like that. Those are the things that are really going to change the world. I'm a big fan of self-driving cars because I think that will change the way we do public transport. It's going to change the way we buy vehicles. It's going to change the way we use them. So I'm a big fan of that kind of transformation. So where the market's pricing in these changes, I'm not so sure. Transformational trends and things that are going to disrupt the world. There are a couple of good companies worth investigating. I'm a big fan of ARK. ARK is a research firm. They've got some ETFs, and they've got a couple of ETFs that are really, really cool. Here they focus on the innovation stocks. They've got one that focuses on genomics, really, really, cutting edge technology. And all you have to do is go to their website, download what the holdings are of their fund, and you can actually see the stocks that they're investing in, that they believe are going to change the world. And it sometimes influences the stocks that I look at too. Might as well use them as a research arm. So ARK is worth looking at for anyone who's interested in seeing where the trends are going to be. And they're fairly influential in terms of where, money is going to be going. So, I think the market's priced most things in. The only thing the market probably doesn't price in are black swan events. So any type of pullback in price, any form of, market change, we have to accept that it's already there. It's just the cycle of the market, right? It's the way in which prices move. So I don't spend much time, worrying about whether the market's going to pull back or not. I mean, you can see the system, the sort of regularity of this stuff. When you see, things like SPY, that this thing tracks these moving averages. This is when it gets bought up. So whenever it crosses these lines and it hits these moving averages, things change. There it fell through. That was last week on Tuesday. Look what happened. Bang. It hit, and then it came back straight, strong. It's just been straight up, for 6 days in a row. It has to breathe at some point. This is the equivalent of holding your breath underwater. At some point you got to come up for air, and you get air on these pullbacks. Most retail guys get shaken out. There's a statement about weak hands. Weak hands always get flushed over here. Sorry. Weak hands get flushed there, and they get flushed here. So a lot of the retail guys are buying here and selling there. That's what they do. That's just the normal way of doing things. What you got to do is avoid buying here and buy there. Now, you're never going to time this. This is impossible to time. But the indication of buying would have been somewhere there on the sort of touch of that moving average. Now, you would have experienced this, and you would have bought maybe again over here. But look what would have happened if you had bought there and bought there. So if your entry signal would be a positive breach of price above the moving average, you would have bought there and you would have bought there. And look where you are now. Right? So this is the whole thing around planning and understanding your rules and what rules you will trade to and being consistent with them. You're not going to be buying here and then selling there. Like, that would be crazy. When you go into a trade, you're buying here, you'd be buying there. The next time you'd be buying would be, you could be buying more at these points over here, buying a bit more there. You might have taken profits on that move, bought back, taken profits again, bought back. That's how you trade. But most people don't have that. They're not watching the right indicators. So they end up just looking at price. When price drives what you do rather than the indicators, it's almost like the tail's wagging the dog. Price is irrelevant. To me, it's irrelevant, because if this could be 210, it would still be sitting this far away from the moving averages. So you wouldn't be looking, I wouldn't be looking over here to buy something. I want this to pull back, because I know every time it pulls back, it rallies. So now would not be a time to be going long SPY. Now would be a time to be going, maybe waiting for the pullback. So that's the way I would be playing it.
So what are you, what kind of plays are you looking at for the next couple of weeks? Any interesting stocks that you see? What about in earnings too? Are there any earnings plays coming up that you like?
Not that I've traded some of them. The last one I did was NVIDIA. We've got a couple of trades in on NVIDIA at the moment. TTWO was a trade I did yesterday. It hasn't really worked out that much this morning. But one of the things that I wanted to show you was, in FinViz, one of my favorite trade setups is a wedge. when stocks break out to the upside on a wedge, it's one of my most common trade setups, and it's one of my most successful trade setups. And it's very easy to do in Finviz. All you have to do is go through to the screener, click on signal, choose wedge, and it will give you all the trades that are meeting that criteria of the wedge. Now, there's still a lot more work to do. You don't just go blindly and do this, right? You've still got to look at each one. So the type of wedge that I like is when you've got this downward sloping trend line here, this upward sloping channel line here, and the price breaks to the upside. So if I look at flexion, FLXN, and I go into my chart, one thing I really like about this is this consolidation period here. But most importantly, look at this squeeze that we've got forming here, and it's fired long. So I really believe that this is going to be going up in price. If I just draw a very, very simple Fibonacci from here, from that high, just on the screen, I'm not going back far, but I'm going from July last year, and I'm going to go down to, I'm looking for a form of consolidation somewhere over here. So I've got my stacked EMAs, I've got my price moving up. I'd really have preferred this to be slightly higher, maybe a higher high, higher low, but nothing wrong with me taking a very small position now with the intention of it going up to the 61.8 line. We'll see how it handles that. If it can get past the 61.8, adding another leg going up to 1439, because this compression is just, this is huge. All right. So I'd be looking for that to go long, build a position, maybe a long call 6 months out at the sort of 80 delta or the 70 delta. That would be a pretty good trade to look at. And that just came from a simple screening on Finviz for the wedge. So we could look at something else. So, IMUX, let's have a look at that trade. So I'm not going into the full detail of the trades that I would do, but I'm just giving you an idea of how quickly you can isolate really easy trades. This one looks a little overextended. We've got a squeeze forming here as well. If I go and put my Fibonacci on here, and I'm just going to, I would want to see how this one opens in the morning. I'd want to see if this can get above the 61.8, maybe on the hourly chart. Let's just change this to the hourly. Let's have a look. So you can see it's already overextended and there's a pullback. So that's actually quite a good thing. Now I'd want to see how this trades for the next hour. If this can trade green for the next hour, we may have an opportunity to catch the tail end of this, because this is only giving us 1, 2, 3, 4, 5, 6 trade bars. We would probably expect between 4 and 10. So I'm in the lower half of the move on the hourly chart, but on the daily, this is still looking really good. It hasn't even started to fire yet. So if I did do something, I'd wait for a setup just above the 61.8. I would have to be cautious because I'd rather have it on a pullback. So I'd need to go with a smaller position to start. And that's just one of the ways that I find opportunities, is to look through a particular technical setup, and then I cross-reference it with indicators. Because there's a lot of beginners will go in and use one indicator, an RSI, for example. And I find that slightly misleading, because stocks can maintain their overbought status on an RSI indicator in perpetuity. I think Tesla at some point last year was overbought for 3 or 4 months. And if you'd been shorting that stock because it was overbought, you would have been taking a lot of pain. So what I try and look at is things like the ADX indicator. So if ADX is sitting above 20 and trending in the right direction, that's something that then validates a directional move to the side. Now, which way would I be looking to go? I use the TTM squeeze indicator to tell me whether it's going up or down, and whether or not the move will be big or small, because you don't want to be trading in stocks where the anticipated move is going to be really small. I want these big explosive moves. And that's what's been giving us all of our wins, is that these stocks, we build our positions before that thing fires off. And when it fires off, we're already in the position. I think our record so far this year is, I think we've had 37 or 38 trades that have all been over 100% win. And our average hold period is somewhere around the 21, 22 days, somewhere around there. So we try and identify these moves early. All right. I want to be at least 2 or 3 days early, because if I can build my position and then it fires long, I get maximum upside. And even better is if I can get into the position, build it according to my rules, and take all my capital out before it fires long. So the only risk I really have on the table is the profit that I've left there in the position. So how we do that is to make sure that we leg into trades. We don't put all our money in all in one go. We identify the setup. We put 1/3. We let the position develop, add another third, let the position develop, add another third. Now we're fully in. And by the time we've added our third, we should be showing reasonable profit, maybe 70, 80%. That's when I take out my first position. And that first position should cover the cost of the other 3 or the other 2. Leave me underexposed at the sort of percentage level, but also give me leeway to add more later. So the thing with trading, you've got to write that down. You know, when I trade, I write this down before I go into a trade. So if I was doing FLXN, I'll give you an example. So if I was doing FLXN and I would say, I'm going to do this on the day chart, right? So I'm looking to do this trade over the next maybe 3 to 4 months. I want to see this fire off. It's going to be a 3 to 4 month period transaction, but I'm not going to hold it for 3 or 4 months. I'm going to hold it for maybe 3, 4 weeks. I want to see this thing fire long, and I can see it's already firing long, but it's not coming out of compression just yet. So what we do is we go to FLXN, and we can see that it's got monthly options first. Now the spread's pretty wide. You know, this is a fairly wide spread. That's a huge spread. So I've got to be really careful not overpaying, right? So what I would look to do is probably buy shares here. I'd probably buy some stock, maybe 300 shares. That's 300 shares times 13.05. That's going to cost me around $4,000. I would buy the shares, and as this starts to develop, maybe I would add a couple call options at a later point. I wouldn't go too big on this because the spread is too big for me. You know, I would probably go in with shares, and I would wait for this to fire long. Once this starts firing, this could easily, you know, hit this. You know, it's above the 61.8. The 78.6 is not really a tough resistance line. The most important one is the 61.8. So if we took that out, we could see probably a trend line forming up to 1439. If I get 1439 and I've got 300 shares, that's a good $500 profit, right? As the position starts to grow in value, I would be looking to take profits and let the profits buy the option. All right. So if I got to, let's say, 1370 or 1380, and I was showing a let's say 60 cents on 300 shares. So I've got about $200 sitting there, let's say, give or take. I would take the $200 off the table and buy myself an option, maybe one of these May options. I'll just buy one of the 10s. I'd probably get it for around 2. Okay, let's imagine I get it for 2. I have no risk on that 2. I've bought it with profits. I didn't spend any capital for that. And that's how you would build your position. You try and de-risk as much as possible. I personally don't like having any money on the table. I prefer having the market's money on the table and me just steward the whole thing. So as retail traders or as beginners, always have that in your mind. You know, try to trade with less capital, not with more. You know, is there a possibility of me being able to buy the shares, buy a call option with some profits, and then sell a put option on the other side as another funding transaction to bring the trade down? So now I've got 3 legs. But it all depends on the setup, right? If the setup is strong and the position is working, continue to use it. So something just to think about, you know, as the guys who are watching this, as you build your plans, try and think a little laterally. Don't just think binary, all right? Don't think just buy the stock. Think about how can I take this position and make it more profitable for me if it's working out? Because I don't know if this is going to work. You know, I could be wrong. You know, this thing could fall through the floor. So what you do is you've got to say, you know, it's got earnings coming up on what day here? Earnings on the 1st of March. So I would probably want to be out of this trade before the 1st of March. So maybe holding the shares, is okay. Get a run into earnings. Get out before the 1st of March. Keep watching. Has this fired long? Okay, then maybe we do something else. You've got to be flexible, but you've got to recognize that you're not always going to be right. I think our win rate is around 70%, which means I win on 7 out of 10 trades. If I don't do 10 trades, I can't imagine winning on 7 if I haven't done the 10, right?
Like,
if I do them all at the same time, sorry, if I just do them all at the same time, I don't know which ones are going to work. So you've got to be equal to start, and then the good ones are going to come out front, put some more money on those ones. The ones that don't move, that don't, just kill them, get rid of them. That's the way I would do it. Sorry, I interrupted.
no, I was just saying I like the idea of, putting out those small positions. That's kind of how I've been playing mine. Really small position, and then the ones that are working, just add to those.
Yeah, and a lot of people also don't know how to, refine a stock list. There's 8,000 shares in the market. Don't try and trade all 8,000. This wedge setup is really simple, because what it does is it only gives me around 30 trades. Okay, if I just look at this here, how many trades does this give me? 29 out of 8,000. That's what's going on here. All right, and I can quickly go through these, just using a visual. I look for the ones that fit my pattern. So I like this one, FSTR. I like that one, although that's a little bit overextended. This one would be interesting to watch, but it's a fun, so there'll be no options on that one. You see, this is what I'll do, is I'll just look through these, see which graphs meet the trade setups that I like. I like that one. And some of them might not have options attached to them. I don't know, but I certainly like this one, Flexion. I like IMAX. This one looks interesting.
That's something you can put in your screener, though, as optionable stocks, correct?
Yeah, I could go in here. Where is it there? I could just look at, there's the optionable. Now it's got Flexion, IMAX, Opera. So those would be the ones that I would be looking at. Oh, there, D-Dog, we're already in this trade. I think we got in and on the breakout. And that's what I would do. That's a really, really simple, quick, easy way of bringing the market to what you trade. There's some guys who prefer other setups, and that's fine. No one. My setup is, I prefer the wedge. There's a lot more that goes into this, right? So, I look at the short floats. I look at, what is the company be doing? Is it being profitable? For this trade, I like the fact that there's a short float. It's got rising EPS, and it's underneath the analyst target price. So this would be a really nice trade to actually start building something on. So I would be looking at the different time frames. I'd be looking at the hourly chart there. I've got some signal. Look at this compression. This is huge. So for me, this might be a reasonable trade to even take on an option, even though the spread is wide. I'd maybe buy a little bit of a position and see if I can buy more later on, and then just keep building a position here. It's above the Ichimoku. It's above the 61.8. It's above the 8. It's got a squeeze. It meets 5 of my criteria. This might be a really nice trade. So if you're watching and you do this trade and you make some money, I will send you my address and I take delivery of Mercedes-Benz cars. Right? That's all I'm looking for. You can buy me a Mercedes-Benz or a nice T-shirt. I'm happy to wear T-shirts. So car or T-shirt, you take your pick.
Yeah, T-shirts are great. Cars are great too. T-shirts are easier to store.
Yeah, I like your T-shirt. I was going to wear my old school jiu-jitsu T-shirt today again, but then I thought, you know what? People who only watch that show and then this one are going to think I don't change my clothes. So
you just got to rotate it. We have to get some characters like like us. Like I'll wear a strange hat. Same.
Yeah.
I
think that's a good idea. I like that. And I think what we need to do is create an old school jiu-jitsu wardrobe. So we need some new colors. So we've got white, black, we've got green.
Yeah. We just wear gis each time.
Absolutely. I'm up for that. I think that would be an awesome idea. Wearing a gi, because we take the market and take the markets back.
People might glance at it though and not understand, and they'll just be like, these two guys are talking in bathrobes.
Hey, listen, don't joke. I've got my bathrobe somewhere here because it's the most comfortable thing that I can wear when I trade because it's warm.
Yeah.
And, you know, sometimes I have to talk to one of my clients and I've got my bathrobe on. They go, like, did you actually get out of bed? I'm like, I've been up since 4 this morning. You know, I just wear it because it's comfy, you know.
I mean, there's no reason. There's no, yeah, I mean, you're stuck in your house. You're not trying to impress anyone. So you just do your thing, you know.
But I do promise you, I am wearing pants. Okay. So
Thank
just,
you. That makes
yeah.
me feel much, much better. I have pants on as well, Chris.
You know, the horrible thing is just hold on while I grab this here, you know, and then all of a sudden, you know.
Yeah. There's just like skin.
Have you seen
gotta be
there's those Zoom video things where you have these people having work conference calls on Zoom and like the husband runs behind and he's underpants.
Oh yeah.
And the dog's doing stuff and oh no.
Well, I mean, if you think about all the people in all the houses and all the stuff that goes on and, you know, the coordination it would take, and there's people that hack into Zoom, you know, and just say random stuff, you know, in those classrooms. So I don't know. I've taught a couple of classes via Zoom. I did one yesterday and I had to cut it a little short because just my throat, you know, I was like, so I'm trying to, I'm getting better at teaching with Zoom with the whole coronavirus thing. Although today I'm my throat's scratchy and I'm just,
be careful. Look after yourself, man. I
I
said to you
will.
earlier, the world needs middle-aged men. We can't be dropping out, man.
Oh, I'm not gonna die.
Damn right you're not. Otherwise, I'll have to come over there and beat the crap out of you.
Yeah, you're gonna kill me if I die.
Yeah, you know that there was a white belt on Facebook who posted something about how he tapped a 2-stripe purple belt using micro adjustments, and it went viral on the group. It was in the Fanatics page, and this poor white belt just got lammed. He was spit roasted, man. It was horrible. You know, like you know how they've got the BJJ Fanatics videos, and it's like, you know, Grandmaster 2-stripe white belt talking micro adjustments. It's his seminar, you know, best $12,000 I ever spent. I mean, the guy's instructor even had to go out and post you know, sorry guys, he shouldn't have said this sort of thing, you know. So yeah, old purple belt me coming and trying to do a number on you is going to be quite a joke.
I mean, it doesn't matter who you are. It's never a good idea just to run your mouth. You know, the people that do that, pro fighters and stuff, 99% of them are doing it because they want to sell tickets.
Absolutely.
Yeah, I mean, you know, some of them genuinely have a bad attitude, but I think it's promoted by the promoters of those fights for them to get into the fights at the weigh-ins. You know, like come on, really, it's like a little bit of WWF, you know, or whatever.
Buddy, I'm going to have to run because there's about 45 seconds left before this bell goes off and I've got to go to the washroom.
Sounds good, Chris. Well, I will. I hope you make a lot of money today. And
Thank you, my friend.
Talk to you again next week.
You too as well. I'll chat to you soon.
All right. Take care.
Take care, man. See you.